joining me for a closer look at what's playing itself out in that market scene is Viv Govender from Rand Swiss Offshore. Viv, always a pleasure and a good afternoon.
Thanks for having me.
All right, Viv, European markets really have lost some steam. We thought I thought maybe the rally would, go on for a little bit longer. And the JSE not too great either. I mean, TFG up beats more than 7%, but they're out with numbers today, which we'll discuss a little bit later. What do we make of what we're seeing on the markets this afternoon?
I think the markets are now waiting for the US jobs numbers to come out. Those are going to be a clear indicator of the strength of the US economy. Obviously, it's been a bit weak over the last couple of periods. Unfortunately, also we have to worry about inflation. I think inflation is the clearer idea as to what's the next step for the US side. But that being said, unless we have like a surprisingly higher employment level than I think we anticipated, the market should still be thinking that we're going to have pretty high certainty, maybe 95% plus certainty of a rate cut this year, and possibly the first one, like a 60+% chance of the first one by like September or so. The fact that we've had Canadians, the ECB, etc., cutting, the fact that we're having a turnaround coming through, I do think that it would take some significantly stronger than expected numbers from the US economy to basically change the expectations on it right now.
Another interesting one that we are watching keenly right now is the Rand. I'm wondering if what we're seeing with the Rand, it actually holding up pretty okay. It touched 19 slightly yesterday. It has seemed to pull back to 1886 to the dollar. That's on the back of course, the African National Congress speaking of their government of national unity. But I'm also wondering if there could be some stuff with the US dollar there weakening that could see us strengthening our local currency.
Yeah, look, I mean, right now, I think the dominant factor in South Africa is basically the elections and the aftermath of the elections, quite frankly. The government of national unity, I think, as the IFP did say, it's all about the details. If it's going to be like, DA, IFP, smaller parties, but no MK and no EFF, the market might relax a bit differently than if it is, more a case of like the MK and EFF coming as significant partners in there. And I think that is the uncertainty at the moment. I mean, I still think that one mustn't be too surprised at the outcome at the moment from what's happening in the political system. Right now, we have a number of different factors in play. We have a number of different, like really aggressive players, especially in the MK side. Jacob Zuma has, historically been very aggressive when it comes to making plays. If you think back when he was taking on Thabo Mbeki, the position he was, the way he ended up, no one would have predicted that, you know what I mean? Out of government on trial, and then he ends up taking out a president that had won, I think, the highest election vote percentage, for anyone before or after. So yeah, it will be a very interesting few weeks, and I think that's what's going to dominate the round more than what's happening internationally, unfortunately.
Another interesting one we're seeing out today, China exports up in May by 7.6%. I'm keen to get your thoughts on that one. China moving products out. I think that's really where they like to be, buoyant exports are rather, Viv. But of course, this is still a very tricky one to read.
Yeah, look, the Chinese economy is, going through a period right now that's quite troublesome. And unfortunately, if you look back in history, the one other country that kind of had a similar kind of trajectory as China was Japan, where it had for like several decades, growth that was crazy. And if you're older, you remember like in the 1980s, it was all about how Japan was taking over the world. Then come the 1990s, it started a downward spiral. It hasn't actually gone out of for the last 3 decades. And so I do think that the Chinese are, being threatened by a couple of factors, most notably the issues in the property market, which are really a big part of that economy. It accounts for like a third of GDP. It's 70%, 65% of private wealth, stock wealth. And I think that sector is really about bigger than it was in 2008 in the US, for instance, in their property market. And it's going to be a big problem to get out of it. The recovery in exports is probably good, but I think that you're looking at a point in China right now where you can't rely on exports, especially when it's going to be facing either Donald Trump or Joe Biden. Either one of those guys are going to be basically or indicating more hostility to Chinese exports. And that's going to spill off to the UK. We already have issues with India as well. So the Chinese can't be relying on external demand for their economy.
I would like to move into some company news now. TFG out today. Very interesting. Their revenue's up 8.9%. But when we look at that headline earnings per share, that's only up 0.2%. It does speak of a rather tough cost environment that they've had to operate in.
Yeah, look, I mean, up nicely today, but if you look at it from a point of view of like, say, 1 month out or something, it's basically flat. And the reason that it's up today is because it's been on a bit of a downward trajectory for the last couple of weeks. So the market was expecting reasonably bad numbers. And it's always its expectations more than anything else that determines what the reaction of the market's going to be. Reasonably weak numbers expected, slightly better than expected. The market rallies today. But like I said, over the last month, it's basically flat.
Also, what's interesting, Viv, is what we're seeing with oil. I'm keen to get your thoughts on that one as well. I think it's at 79, around $79 to a barrel there. It's been a tricky one. We did have an OPEC meeting earlier this week. But of course, what OPEC plus what can't fix for is demand issues.
Yeah. Look, I mean, people must not forget that ever since we've had since the shale revolution in the US has become a major player, in fact, the major player in the oil market. It has been able to basically produce lots of oil locally and it from the biggest consumer to actually export. Also, as we head into the elections, apparently the Biden administration is depleting some of its reserves, especially these gas reserves. It kind of makes sense to a certain extent. Their refining capacity is quite strong. They do have obviously the local production of the feed into the refining industry, so they don't need as much refined products in store as they maybe needed to in the past, and they feed that into the market. That's also bringing prices down a little bit. And like some of the issues we've had in the past, for instance, around Iran and Israel had diminished. There's not that fear that we had just a few months ago about a war between those two countries. So I think overall, a big supplier for the biggest, what used to be a big consumer, is now the biggest supplier in the world. They are also going to election and diminishing, reserves, and general tensions in the world are coming down. So yeah, I think it's not looking positive for oil at the moment.
And lastly, but before we move on, resources. At some point, I thought resources were rallying. We seem to be back in some sort of a yo-yoing, trend line here. Up one day, down next. I'm wondering here if what led to the rally initially, I guess, was a better global sentiments. Have those waned a little bit? And also, SA Inc. and the impacts on resources counters.
Yeah, look, I mean, SA Inc., obviously, we don't consume most of the resources you produce in this country. It's mostly for export. Obviously, you're going to be able to get this stuff to the ports to export it. So, it's not like the SA Inc. story is not going to affect them. If we can see a government come into play that the market believes, for instance, would be better at making Transnet operate and making ESCOM work, I think you'd see a lot more, positivity even in the mining sector than you have right now. But regarding global sentiment, yes, we are seeing, like I said, weakness in the US economy and other economies out there. That's only going to diminish demand. The Chinese economy, especially, is very important for resources. They're a big part of the world economy, but they're a bigger part of the demand for commodities, and that slowdown, especially the property sector, I think is going to have long-term effects that are going to be difficult to overcome. You would need to have a significant spending happening in the UK, Europe, the US, etc., to make up for China. And yes, there has been some infrastructure spend happening, but it's going to be have to be a bit more than that to replace what China is basically losing over the last couple of years.
Well, let's get into our stock pick segment now, maybe starting off by reflecting on counters that have found favor with your industry peers.
Today, I'm picking Remgro. I feel like I've done this one again in the past, but I think it's still quite compelling. 50% discount to NAVs where it's trading at the moment. So this is kind of the widest that it's been. Still good, quite good, attractive assets, spread across telcos, healthcare, industrials, food, everything. So attractive portfolio trading at a discount, and there's potentially, it's still sitting at a Comcom, but the CIVH Vodacom deal with Remgro as well could potentially, unlock the next level for their telecoms business.
I like First Rand. I think it's sold off quite a bit. Now it's closer to that 60 Rand level. And the truth is quality is quality. They've got the highest return of the four big banks. They're nicely diversified. Yes, there is a little bit of an overhang from the issues in the UK, but the SA business is firing on all cylinders. They've been the one business that's been lending in a counter-cyclical way. So if interest rates do come down, and if they do come down, whether moderately or aggressively, they will benefit.
So stock pick for me is going to be Anheuser-Busch for a number of reasons. First and foremost, with the interest rate cycle looking like it's topped out. You expect those rates to drop. Anheuser-Busch has been a little bit under pressure at the start of the year. That was because of the amount of debt they're carrying. This is going to help them. And also anticipating the Fed coming in September and cutting, that should lead to a weaker dollar. More than 70% of Anheuser-Busch's income is from emerging markets, which really does like that weaker dollar story. So a little bit more of a play on that dollar and global currencies. And stock, I think, it hit a half of the year, I think, shortly, about $1,200 a share. So I still think there's legs in it going into the year end.
All right, Viv, keen to get your thoughts on those Remgro, First Rand, and AB InBev.
Look, I mean, First Rand, a lot of value there, but I mean, the value in the banking sector at the moment is ridiculously high. Look at like ABSA, for instance, which like the P ratio, the dividend yield, etc. on the company. The market's pricing a lot of risk with that sector. And if we don't have that come through, I mean, you probably could see a nice rally coming through. And as a Bush, yes, I do agree that there's been some setbacks to the company. They are trying to revamp some of their marketing out there. I don't know exactly enough about that industry to make a big call on that. And with Remgro, like with the RCL stuff happening, I think that might give it a temporary boost at the moment. Longer term, I do think that you need to be looking at more economic growth coming through to really support a company like this.
With that said, Viv, which accounts are you loving this afternoon?
Me personally, I'm a big fan of Tesla. I know it's been down. I know it's been under a lot of pressure. But if you just look at what's happening with regards to AI at the moment, the upside potential for Tesla is huge with robotics, with self-driving, etc. And everyone in the industry agrees that Tesla has the leading, self-driving and leading physical world AI systems out there. The only question is it possible to do this stuff? If it is, Tesla's going to be worth a lot. If it's not, then unfortunately, that company is got a long way more to fall. But I think that in terms of the risk-reward benefit here, you've been looking at a risk-reward profile. So it's a trade-off. Good company to look at.
Wonderful, Viv. Thank you so much for your time today. It's always a pleasure having you with us here on Business Lunch. That was your midday markets update with Rand Swiss Offshore's Viv Govender.